Hey, I'm here with Tim Gurule, a real estate investor turned mortgage lender. And Tim, what got you into the business, and why do you love what you do?
Yeah, have you ever heard the theme that if you're talking about something so obsessively, learning about it, reading about it, listening to podcasts about it, and telling everybody that you know all of these tips and tricks and tools to use it and better your life to get to the next level? Well, that was me. And I started talking about it so often that all of my family and friends were like, listen, you need to shut up about it. And I was listening to this podcast one day, and the podcast says if you have something in your life that you're so passionate about that everybody immediately around you is sick of hearing about,
Right.
then you need to go do that full time as a profession. And so I started doing it. What got me into this business was I started as a real estate investor, and I was using residential mortgages to hack a portfolio and grow passive income streams. And I was learning everything. I would call mortgage lenders and ask them about every loophole and trick and tip and how do I scale. And they got sick of me calling and asking. And finally, I just reached a point where I just realized this was such a huge opportunity to use leverage to grow your wealth generationally that I wanted to pursue it full time, because I wanted to give people all of these tips and tricks and tools that I had learned over the last 7 years and package it up and give it to them so that they could take charge of their lives and have that power.
That's awesome.
Yeah.
Yeah, and that's something I've seen from your social channels that you are a wealth of information and you graciously give it out to all your viewers. I love that.
Yeah, I just really think there's nothing quite like real estate in the world. And if you really consider how much leverage you have in investing in real estate as an asset class, there's no better asset class. By far, it's the best in the world. It's a physical thing that people need to occupy for shelter, and the bank gives it to you with between 97 and 95% leverage. So just think about this for a second. You want to go buy an asset that's going to appreciate in value. Let's say you want to buy stocks, right? You want to buy Walmart stock. Walmart's going to appreciate over time. Well, you can literally go buy this stock, which is the house, real estate, and the bank gives you 95 to 97% of the money required to purchase it as it appreciates over time. But not only that, the money that you're getting to buy this asset class from the bank, well, the day that you get it, it's worth by far the most it's ever going to be worth. Because every subsequent year that you hold that loan, the value of that money goes down and down and down, because inflation is eating away at the value of the money. So your asset class is going up, the house value is going up, you have people paying off your mortgage or you're occupying it as shelter, and the bank's money, the value of that money is declining over time. There's no better way to build wealth with that level of leverage.
Right. So someone wants to buy a home.
Yeah.
What are the first steps they need to do to get pre-approved?
Yeah. So pre-approval is really easy. In fact, I think so many people have these misconceptions about what it entails and what kind of a headache, and they get all these ideas in their head of why they're not qualified. And I bet you 9 times out of 10, if those people just picked up the phone and had a quick conversation with a mortgage advisor, it's so much easier and attainable than people give themselves credit to being able to accomplish. What I like to do, the first thing I like to do is sit down with the client, and we have a 15-minute phone call. And this is where I learn about them. I want to know, what is your plan? What's your strategy? Why do you want to buy this house? Do you want to live in it forever? Is it a temporary purchase? Do you want to start investing? And with that information, I come alongside you kind of like a wealth advisor. And we make a long-term plan that's aligned with a strategy that fits your vision and plan. We're going to talk about things like, how much money do you make? We're going to talk about, what kind of debt do you have? Do you have car payments? Really easy questions, right? And then I send you an application, you fill out the information, and I take a look. And I think this is where a lot of people get scared, because they're worried, well, what happens if I don't qualify? But oftentimes, A, more people are qualified than they think. And B, if there's 1 or 2 little hiccups that are keeping you from getting qualified, I can easily make you a plan. We can work together as a team. I could say, hey, this is how we're going to fix your credit score, or hey, we're going to pay off these certain debts. Hey, let's make a 6-month plan. I'm going to send you a budget. I'm going to help you start budgeting your monthly income so that we can get you in a house within, a reasonable time frame. And I think so many people run away from that. They're scared of what they don't know. But the sooner that you identify the problem, the sooner we can make a plan and the sooner we can get you into a home. It's really, really attainable. The government makes it so easy to buy a home because they want Americans to own a home. They encourage Americans to own homes.
Yeah, I love that. That's funny. Like, reminds me of like being at tax time.
Yeah.
And like when I'm doing my taxes and I'm so nervous that I'm gonna get audited.
Right.
And so it's like if you're getting that pre-approval process, maybe someone is a little apprehensive about what you might find in their finances.
Exactly. And just having that conversation, what it really is, the pre-approval is really starting a relationship with somebody that's going to come alongside you and give you the wisdom and insight to make a plan to get you where you want to go. Everybody has these visions of what they want their life to be at year 10, 20, 30, right? Retirement age. What a pre-approval really is just starting a relationship and putting rock stars on your team that are going to come alongside you and help you accomplish that vision. If we have a destination we want to get to, the first step starts today. And instead of shying away, being afraid, we should really go look for those teammates as fast as possible because they're going to have the knowledge to get done what you want to get done. And it's really not intimidating. It's not scary. It's free. Here's something that I wish more people knew. Pre-approvals are totally free and there's no downside. It doesn't cost you anything. You're getting a free financial plan on how to get into a home, a purchase of a home.
Mm-hmm. And will that hurt your credit score at all?
No, absolutely not. So the credit bureau reports, I think what you're referring to is people get scared that their credit's going to take a hit if there's credit inquiry. So if we're running your credit all the time.
Right.
There's a couple ways that you can look at this. Number one, the credit bureaus that report your credit scores, they know what it looks like when people are shopping for a home. So within a window, within like a 30 to 45 day window, there's allowable limits of multiple credit inquiries without penalizing your credit score. Mm-hmm. On top of that though, the way they've categorized these credit pulls has changed over the years. So it doesn't, it's not detrimental to your score every time there's an inquiry for a mortgage loan application. It used to be a hard hit. Everybody talks about, are you going to do a hard pull on my credit? And you'd see, the credit company would look at these inquiries and they would say, well, why are so many people looking at your credit report? We're going to dock you points. But they've amended how they view these credit inquiries, and it's really not impactful on your credit at all. And within a window of your shopping opportunities, it doesn't impact your credit score whatsoever.
Awesome.
Yeah.
So what are some of the different loan products that you offer?
Yeah. So different lenders offer different types of products. I'm really fortunate. I work for an organization that we have pretty much everything. Anything from manufactured homes to government-backed loans, and I'll kind of explain what each one is. So typically you have what's called conventional mortgages. These are backed by Fannie and Freddie. You also have government mortgages, which are FHA, FDA, but on top of that, you have niche and non-QM. Non-qualified mortgage, non-QM. These niche products are in a separate category because they're for people like business owners, entrepreneurs, real estate investors, and so we can kind of just talk about each one. Most people that come for a residential home loan, a mortgage, are going to typically fall into the conventional mortgage product, right? This is a regular product where you put 5% down, for your money down deposit, and the bank leverage is 95%, and it's fixed interest for a period of 30 years, and they have pretty, bland guidelines. There's nothing crazy on there. Most people qualify for those. Mm-hmm. Then we have what's called government-backed products. These are products that are insured by the government, and they range in a variety of uses. So FHA, in particular, when you're getting a mortgage, your income matters. How much income you have and how much debt you have. But the FHA program is for buyers. It's to entice buyers that normally wouldn't have an opportunity because they are a little bit outside of the regular box of the conventional lending. So We allow FHA loans to have a little bit higher debt limits, and you can put less money down. Instead of coming up with 5% down, you can put down between 3 and 5%, 3.5% or so. There are pros and cons. So on a FHA loan, the upfront cost is a little bit cheaper. You put less money down. Oftentimes we can find a little bit better interest rates, but the downside to these FHA products is that you carry MI for the life of the loan. It can't be refinanced unless you go into a conventional loan. And what I'm talking about here is there's this thing, MI, is called it's mortgage insurance. How the banks secure the investment is, since they're giving you so much of the money, they want you to carry an insurance policy that protects them in case you default on the mortgage. On a conventional loan, that mortgage insurance falls off when you have 80% equity, or when you have 20% equity in your property, an 80-20 loan to value. So at a 20% equity position, the mortgage insurance falls off on conventional loans automatically. So your payment decreases. On an FHA loan, that mortgage insurance carries for the life of the loan. So it can be kind of more expensive on the long run, but it really helps you get into a house on the front end. You could use an FHA product to build your wealth, increase the equity, grow your net worth with your property, and then a few years in, you could always refinance into a conventional product to drop that off. We also have products like the VA loan, which is incredible for veterans. It's something that I'm personally really passionate about. This is how I got started. If you're a veteran and you've served your country, the government rewards you with giving you a 0% down loan, which is incredible. And we live in an area with a ton of military up here. Most military that live off base get something called BAH. It's a basic housing allowance. It's a monthly payment for them to go pay rent. Well, if these veterans up here realize the power of the VA loan, they could go get a free house because they qualify with 0% money down on a VA loan, and the government, the military, is paying them a housing allowance. So they can buy a house for free, no money down, and they're going to get a monthly housing allowance to pay the mortgage. So while they're up here, they could be living for free in a home that they own, that they're making equity on. And then when they leave, they could either sell that home and buy another one, or they could keep it as a rental property and move into the next one because the government's going to keep doing that. We also have things like USDA loans, which are also 0%, no money down loans, and these are really focused on rural areas. And then we have our niche in non-QM products. We have things like bridge financing, and we have investor loans like DSCR, and we have bank statement loans. So let's say that you're a business owner and you write off a lot of income on your taxes. A lot of business owners are trying to make it month to month, and they need to take as many deductions on their taxes as possible. If I were to look at their straight line income, they may not qualify for a conventional mortgage because they may be outside the debt to income ratio. I could see they make a lot of money. I could see it on paper. I could see it in their bank accounts. But per the guidelines, I have to use taxable income, what they filed on their taxes. Well, the way around this is we can qualify these business owners by looking and verifying at bank statements. We can look at a history of bank statements, and it gets them into a home loan. We can see they're making money, but they're trying to utilize the tax advantage that the government allows them as business owners. Another product we have, I talked about bridge financing. What a bridge finance loan is, let's say that somebody wants to buy a new home, but they don't have enough money saved up in their bank account to put money on the new purchase. What we can do is take their existing home and give them a loan on the equity that they already have. We can give them cash in hand to go cover closing costs and their money down, and then at the sale of their existing home, we'll just recoup that. It's like we're fronting them money for a couple months or a month or two until they close and purchase the new home and this one's sold, and we just make the difference. It's a really powerful tool for people to tap into their equity without having liquid cash. The most exciting product that we have right now, I think especially looking ahead at the next couple years with a little bit volatile investor market, is we have these products called DSCR loans. It stands for Debt Service Coverage Ratio loans. And what makes these loans so special is they're based 0% on you as an individual borrower. No credit score, no income. What it is if you find a deal, a real estate investment deal, like an investment property, and you pencil the numbers out and you find, wow, for the purchase price of this property, and based on the rents in the local area, you can bring me that deal and I'll verify your numbers. And if the rents cover the debt, we can give you that loan without any money in the bank, no credit score, when I say no money in the bank, I mean not based on your personal income. These loans are based strictly off of the real estate investment deal that you bring to us. So there's some really cool and creative products out there right now. There's a whole laundry list of products that we really have at our disposal that can fit anybody's need, and we have a solution for anybody's problem, really.
Let's say that I have an FHA loan.
Yeah.
I put 3% down. Mm-hmm. Will that mortgage insurance stay with me forever until I refinance to
Correct.
A conventional loan?
Correct. FHA has MI for the life of the loan until you refi into a conventional product, yeah. So this is why when I get buyers that are, adamant, they've heard something on YouTube or, social media, and they're saying, I want this, I'm happy to give that to them. But what I really do is I present to them all the options and give them the pros and cons. I think that an FHA loan is an incredible product. If you don't have enough money to put down, if your debt is too high, if this is your only option to get into a home, let's use that bad boy. But we're gonna make a plan together about refinancing in the future. We're gonna make a plan and strategize how to best utilize this so that you're not getting drugged down. The most successful investors, and I know I talk a lot about investing, but I think more Americans should be mindful about where their money's going, because we're just living in an era where things are getting more expensive and we need to really be prudent, more and more prudent, just to exist week to week, And I think if more Americans were conscious of where's their money going over the long run, and they paid better and closer attention and they made minor adjustments along the way, we just have the ability to end up in a much better place than we would have if we just kept our head in the sand and kept trucking along. So I think that there is a superpower with using things like the FHA or first-time homebuyer programs. But I feel like we really need to make a strategy to make sure it's best serving you for the duration. I hate thinking of mortgages as a single transaction. It's doing the buyer such a disservice because, look, anybody can go online, go to Rocket Mortgage, call. There's a call center of 100 people, and they're happy as clams to originate a mortgage for you and probably close in 15 days. And the next time you call that call center, chances are there's probably 100% chance it's going to be a different individual that's picking that phone up. When it's time to refinance or interest rates get better, the person that was working in that call center probably doesn't work there anymore. They're making a minimum hourly rate. You really need somebody on your team. There's a time and place for that. If you want to use a service like that, there's a time and place. But to grow wealth, to have somebody who cares about you, who's checking on your file, who remembers every transaction, who's not just thinking of a single interaction as transactionally, but as a lifelong relationship. We've made a plan and we're going to grow your wealth and stay aligned with this plan and check in and make sure we're doing well and we're staying on track. That's really the difference in separating outcomes in life, like where you end up versus, the guy or the person who kept their head buried in the sand and, went with the cheapest option, I guess.
Right.
So.
Right. Yeah. I love that.